Hi there, welcome to kneppyinvests and welcome to another technical update video. It is the 10th of August 2025. Time is currently 10:45 a.m. This is take number 2 because on the first take, for some reason, TradingView was having some lagging issues, significant lagging issues, and I just got really fed up. It seems like it's behaving itself right now, but who knows? But this will be my final take. I'm not going to do it again. So if it does start to misbehave again, I think I might just pause and then not pause the video, but just pause what I'm talking about and then come back to it when it starts behaving. So I'm getting a little bit fed up with TradingView. I'm not sure if it's TradingView or the internet. My parents do have some NBN people coming tomorrow to put in the fiber to the premises box. So hopefully that will fix any issues. Hopefully. Okay, so what we're going to do is we'll go through the indices. We'll have a look mostly the weekly, but also the daily. Fairly bullish when it comes to most indices at this point in time. I think it's probably prudent to be bullish right now, just because that's what the charts are saying. And then we'll have a look at the commodities. I don't remember what commodities I like. I did have a look at commodities yesterday, but nothing really stood out to me all that much, if I remember correctly, and maybe one. And then we'll have a look at crypto. There is one that stood out when it comes to crypto, Ethereum breaking out. And then we'll have a look at bonds and currency. And then we'll have a look at some individual companies' charts. And all these companies are on the Nasdaq or New York Stock Exchange. And these companies all saw the share price rise or drop a significant amount when they release their quarterlies. And sometimes this does lead to opportunities. So about 10 or 11 companies in that group. And they're all listed on the Nasdaq or New York Stock Exchange. Okay, so let's start off with looking at the weekly chart for the XJO. And pretty good week. Yeah, pretty good week for most. And I'd say the best performing indices, I'm doing this on top of my head, best performing indices, probably the XSO and mining. And the worst performing indices during the week was probably the banking sector, which sort of makes sense. I think there might be a bit of rotation from the banks into mining. And the very fact that small caps had a pretty good week also is sort of suggesting that investors are a little bit more risk on, willing to take on a little bit more risk. Because they do or are feeling a little bit more bullish. And I think when investors are feeling a little bit more bullish, they tend to gravitate towards those companies that have higher upside, maybe a little bit more risk, but higher upside. And when it comes to the banks and even the XTL ASX 20, I think those companies have little less upside. They're more mature, less growth. And maybe there's been a rotation out of those companies into the smaller companies and into mining as well. So a little bit more risk when it comes to mining. Anyway, XJO had a pretty good week. Record week, up 1.68%. Reached the record, I'm pretty sure on Wednesday, because we did see the XJO pullback on Thursday and Friday, but this daily chart looks pretty good. So no complaints when it comes to the daily chart. Maybe the only thing you could say, the only reason to be maybe a little bit wary is that the XJO is well above the top of the trading range, but it's been above the top of the trading range for about 2 months right now. So maybe that's the end of this range that has been in play for 15 years, maybe even longer, about 15 years, maybe even 16 years now. So maybe that's the end of this trading range. So maybe that's the only way you can be bearish right now. It's above the top of the trading range, which means there's a great chance we're going to see a little bit of weakness moving forward, but the market can remain irrational for a long period of time. So maybe that's the only reason to be bearish, just technical wise. But overall, I think it's probably prudent to be a little bit bullish just because what we're seeing on the charts right now. Now, as we turn attention to the XSO, this particular indice had a great week, up 4.1%, 4.05%, not far away. And in fact, this is the second good week out of the last month. So really good week when we saw a breakout, up 3.24%. And then the XSO went sideways the last 2 weeks, relatively sideways, and then another good week. And the last time the XSO was this high was way back in 2022. In fact, early 2022, maybe late 2021. So we are talking about a 3.5 month high. And remember back then, that was at the start of the period where we started to see interest rates starting to rise. So a lot of small caps would have been negatively affected by that. If we have a look at the daily chart, it also looks pretty bullish as well. In fact, this is a really nice looking chart. A nice little pullback, hit the 25-day moving average and started to go up again. Exactly what you like to see. And we have seen you have seen that 25-day moving average has been acting as support for this indice for a while, and well above the purple box now. So that has been a bit of a resistance zone, and now we can say it's probably a bit of a support zone. The other thing is, a lot of the other indices had a bad end to the week. I wouldn't say bad, down end to the week on Thursday and Friday, and XSO was actually up. X was actually up. So really nice week for the XSO. Can't really say the same thing for the XTL, but still it was up for the week and still at or near record highs. So up 1.03% for the week, and actually did get to a record high during the week. So that probably would have been Wednesday. Yep, Wednesday. And we did see it pull back on Thursday and Friday session. And again, above the purple box. So even though maybe I'm being a little bit harsh on the ASX 220, it's still near at record highs. So it's still going up, still in an uptrend. What about the tech? So we had a really good week for Nasdaq. Did that translate to our tech sector? So let's have a look. In fact, tech, or the XTX, only up 0.94% for the week, which was well short of what the Nasdaq did. But still, again, looking nice, near all-time highs. Yeah, what can you say? You maybe argue the all-time high was reached last week. Yeah, last week, and it's struggling to get above that level, but you're really picking. You're really being pedantic if you're saying that. And again, just above the purple box, which is a nice little resistance area, now a support area for the XTX. Probably the one indice that I thought that may be looking a little bit weaker than the rest would be the banking sector, or the XPK, which is the ASX 200 banks. So that means there's 7 banks within this particular indice. So let's see if my thoughts are right. It was up for the week. Was up for the week 0.6%, but not as good as some other indices. The weekly chart looks fine. The weekly chart looks fine. What about the daily chart? Because I did put this downward line, this downtrend, sort of a weak downtrend, and I put that in the other day. And on Friday, the reason I put that in there, I just connected the high this indice saw back in June. Then I connected to the next high, which was the high in middle of July. And I just noticed on Wednesday that this particular indice hit that particular downtrend line and started to we started to see a little bit of weakness in Thursday. And on Friday, it fell a little bit further up. So there is a short-term downtrend now for the XPBK. So if you see that downtrend line broken, that means, well, that short-term downtrend has come to an end. But that's probably the only bearish thing I could find, significantly fine. Well, maybe not even significant, it's fairly short. But maybe that's the only negative thing I could find out of all these indices. Maybe if you really want to be pedantic. But again, it's short. It's not that long. And if you have a look at the weekly chart, still in a nice long-term uptrend. Now the XMM. This one's going to look spectacular. I have a feeling this would have been up 4 to 5% in the week. Let's have a look. Oh, gee, 5.5% up in the week. And in fact, the daily, oh, by the way, look at this. So this one was a longer term downtrend. In fact, it had been played for a year and a half. Broke out of this downtrend back a few months ago. In fact, 1 month ago. A beautiful breakout. Last week was fairly weak, and it looks like it's bounced almost perfectly off this downtrend line, which is now support. You do see that on occasion. When any sort of downtrend or uptrend has been broken, you might see that tested. And we had a really negative week last week for mining and a pretty spectacular week this week. Now, the one thing I'd like to see is a new long-term high. So I'd like to see the XMM get above 5,800 for me to be even more bullish on this particular indice. So I do have quite a few mining companies that I'm trading right now, but I'm not trading them for the short term. So that's one of the shifts I've made when it comes to my trading philosophies. Not trading mining companies for the short term, but more the medium term, because I do think mining companies, that's the way to play mining. It's more the short term, more the medium term, not the short term. And I think we do or are seeing a shift in sentiment when it comes to lithium. So with that shifting in sentiment of lithium, if I buy lithium companies to trade, it's going to be for the medium term. I won't be reacting to short-term movements. That's probably another way to say it. So this is a short-term move, what we saw last week, and this is another short-term move, but definitely more bullish when it comes to mining. So hopefully I've made sense when it comes to how I trade mining companies now. It's more for the medium term, not short term. So definitely bullish on a few mining companies. But anyway, so let's see Aussie indices. Now let's have a look at New Zealand. And I'm not sure why I keep on looking New Zealand, because there's nothing much to see here. So this is the daily chart. Man, it's a very slowly moving uptrend. Maybe, I don't know, but nothing too exciting when it comes to the NZX 50. Even if we have a look at the weekly chart, yeah, nothing much to see here. In fact, if anything, I might say it's a fairly boring looking indice. Okay, now onto Wall Street, where it might be becoming a little bit more interesting. The NDQ, which is a Nasdaq 100, up 0.95% for the week, and looks like it finished. No, not for the day, for the day. And for the week, it would have been up a fair bit, because apart from Thursday, it was a pretty good week. Oh no, that was the week. Oh, I'm sorry. I was looking at the 0.95, and for some reason I thought this was a week. So a pretty good week, up 3.73% for the Nasdaq. And it was a pretty good week. Most days were up except, it looks like Tuesday was down. And remember last week, or the end of last week, Friday was really bad. So I was thinking, ooh, maybe there could be lead into sort of the start of a little bad period for the Nasdaq. No, it just turned around fairly quickly, and in fact, it closed at the all-time high. So a pretty good week for the Nasdaq, which is another reason why I'm surprised that the XTX or the Aussie tech sector didn't have as good as a week as it did. Now, another thing I'm just going to mention here is some people might say, why don't I look at the S&P 500? Well, it's simple, actually, because they're almost identical. This is the Nasdaq, or that's the S&P 500. This is Nasdaq. They're almost identical. They're almost identical. Not quite. There's subtle differences, but they're almost identical. So I've decided just to have a look at the Nasdaq and just leave S&P 500. Now, even saying that, if we go to have a look at the Dow Jones Industrial, there's actually quite a few companies in the Dow Jones Industrial that are actually in the Nasdaq. So there is a bit of overlap here. So they're not absolutely identical. And you can see that in the chart, that Nasdaq is definitely looking stronger than the Dow Jones Industrial. Only 30 companies in the Dow Jones. I did have a look at the makeup of this just before I started recording, because I can't remember the last time I looked at the Dow Jones Industrial or the constituents, and I was surprised that there were a few companies in here that I was like, oh, okay, I didn't realize that company's in it, like NVIDIA, Nasdaq. What else? I think pretty sure Apple's in it. Yeah, Apple, Amazon, but a nice group of companies, by the way. In fact, if you held a lot of these companies, you probably wouldn't be that upset. Anyways, so that's a look at the Dow Jones Industrial Average. And if you do have a look at the list of companies within the Dow Jones Industrial Average, you might be so shocked that this chart actually does not look as crash hot as some of the other indices. In fact, it is really struggling to get above, what was it, about 45,000? Yeah, about 45,000. It's really struggling to get above that level. It's hit it 3 times now, and it's failed to get through. So nowhere near as bullish as the Nasdaq, and the main reason is because that resistance level, and it's just struggling to get above that. Anyway, so that's the Dow Jones Industrial. What about the small caps in the United States? We've seen a pretty good week for the XSO. Is that coming from some bullishness in the United States? So let's have a look at the Russell 2000. And we'll go to the weekly chart. By the way, Dow Jones was up 1.35% for the week. What about the Russell 2000? It was up 2.38%, but not quite as bullish, in my opinion, as the XSO. In fact, I want to see the Russell 2000 get above this purple box. Now, saying all that, I'm not as keen on small caps in the United States as I am in Australia. And the main reason behind that is I don't know as much about these companies. And I've been investing in ASX companies for 15, 16 years now. And I just started investing in United States companies about 3 or 4 years ago. So I'm not as aware of many of these companies. In fact, I've started researching some of these companies, and many of these companies I've never heard of before. And a lot of these companies aren't even in the US small caps. They're a little bit bigger. Anyway, so that's the Russell 2000. Not quite as bullish as the XSO. Okay, now to some international indices. We'll stay with the weekly chart. And we'll start with the Nikkei. And I have a feeling up 1.85% on Friday. I have a feeling this might be looking good Ooh, it's at all-time highs. In fact, it did close at an all-time high. Not quite all-time highs because we did see the Nikkei get an all-time high back in the middle of 2024. But it's looking good. It's looking good. The weekly chart for the Nikkei looking really good, and a really good week, by the way. It's a really good week, up 2.5%. But most of the heavy lifting was done on Friday's session. So we have be able to look at that. Yeah, there we go. In fact, it started weaker, down 1.25% on Monday. So after that initial weakness, it's rallied quite nicely and right on the all-time high at 42,000. So hopefully this breaks out over the next few days. Okay, that's Nikkei. What about Hang Seng? In this one, negative week last week. Nice little small bounce this week. Up 1.43% for the week. But yes, the weekly chart still looks pretty good. Still looks pretty good, the weekly chart. We've seen a couple of now high highs, so 2 high highs in a row. After the breakout back in September of 2024, so almost 1 year ago, we did see a breakout, and then we've seen a couple of high highs. Exactly what you want to see. So 2 high highs and at least one. Well, we'll say a few higher lows as well. So that's the definition of an uptrend: higher highs, higher lows. And this little pullback is just probably a natural pullback in an uptrend. Daily chart, yeah, nothing to complain about the daily chart either. It's behaving exactly as you would expect to see for anything in an uptrend. Okay, now on to the European indices, DAX, which has been one of my favorite indices for a while. And yeah, nothing wrong with this. The weekly chart looks okay, up 3.15% for the week. So nothing wrong with this weekly chart for the DAX. What about the daily chart? Does it look? Yeah, no, it's still an uptrend. This is more of a feeling. It does look like it's trying to roll over. You can see the highs, recent highs, really struggled to get above the previous highs. So it is a new higher high, but it's just struggling. So when I see this chart, I just think, oh, it's rolling over. I mean, not rolling over, but I think most of the uptrend, I wouldn't say most of the uptrend has come to an end, but a lot of the heavy lifting has already been done. And I don't know which way it's going to go from here. More likely a little bit more upside, but don't know. But yeah, it looks like it is trying to roll over. What about the FTSE, which is another index I've been liking? Let's go to the weekly chart for the FTSE. Looks like it's been at all-time highs the last few weeks. The weekly chart looks pretty good. No complaints about this weekly chart. And for some reason, the moving averages, there we go. The weekly chart looks pretty good. In fact, it's been looking pretty good for a long time. Well, since 2021. The weekly chart looks good. It's been an uptrend. No complaints. What about the daily chart and all-time highs? I don't mind this chart either. I actually prefer this chart over the DAX just because we are at all-time highs. And in fact, this particular index is just going sideways right now for the last 2 or 3 weeks, which is good. Consolidation period. And again, the moving averages aren't working. This is a sign that now TradingView is behaving a little bit erratically, a little bit slow. That's a pretty good word, erratically. And I found TradingView can be really erratic for some reason. I don't know why. Really erratic. At times in the day when you think it should be working really quickly, it works really slowly. And then other times you think it should be working really slowly, it works really quickly. But anyway, so right now it looks like it's working slowly. No idea why. Maybe the next door neighbor has decided to stream a 20K video or something like that. My parents are getting the NBN people to come tomorrow to put in a fiber to the premise box. That's going to be awesome. Hopefully that fixes everything. Hopefully. Okay, so nothing to complain about when it comes to the FTSE, I think. What about the Canadians? So this is really interesting because I think I talked about this in another video. We saw the TSX have a really good, was it Tuesday or Wednesday? I forget. Tuesday and Wednesday. And Shopify, which is one of the biggest companies on the TSX, maybe not the biggest, they were up 25% on results. TSX makeup. Let's have a look. Okay. By market cap. By market We have Constellation Software, probably a few oil companies, financial companies, and Shopify is the largest company on the TSX. There you go. And when the biggest company on your exchange is up 24%, I think it was 23% maybe, your overall exchange is going to have a pretty good day. And that is probably the biggest difference between the TSX and the ASX is if you have a look at their biggest company, it is a significant growth company. A significant growth company. You can't say the same thing about CBA or BHP. Shopify could be 5 times, 10 times bigger in 10 years' time. You can't say the same thing about, Royal Bank of Canada, Toronto Dominion Bank. But otherwise, if you go below Shopify, some of these are fairly similar than what you'll find in the ASX. Quite a few banks, Reuters, and there's Constellation Software, 9th biggest company. There you go. Well, guys, so that's why you see this massive jump in the TSX. That's because of Shopify. And that's probably another reason why this particular indice looks really good. If you just compare to Shopify, let's have a look at Shopify. If you have a look at Shopify, you can see that jump. Yeah, it was on Wednesday, wasn't it? Yeah, up 22%. Sorry, up 22%. And anyway, that's what I'm going to talk about. In fact, I was going to talk about Shopify in the individual company portion of the video. I can now get rid of that. Anyway, so this is me just bragging on because I do own Shopify, and I'm going to brag even more. I bought Shopify near the lows, not quite at the lows, at 36.56. So am I happy right now? Absolutely. Absolutely. It's just weird that this was one of the companies I was focusing on. All the other companies I was focused on were the big companies, but this is the smaller one. I was like, I just thought to myself, yeah, this one is going to be huge in the future. Anyway, so that's me going on a bit of a tangent. Now, let's have a look at commodities. Gold. This is an interesting one. Gold had a really good, the gold sector in Australia had a really good week. And if you don't believe me, ASX indices for the week, gold up 11.45%. So you'd be thinking that gold, the price of gold, had a really good week. And you would be, it didn't have a bad week. It was only up 1%. So, don't know. The other thing I should mention, this gold chart looks pretty good, doesn't it? It's a beautiful chart. Absolutely beautiful chart. In fact, it's been beautiful, apart from a short period back in 2022. Which correlated with the overall weakness in the equity markets. It's been looking good since 2019. In fact, the price of gold has almost tripled since then. The one maybe negative thing you could say about gold was there was a bit of an uptrend here. It did fall through the uptrend, and has failed to get past 3,440. I'd like to see that. That would be a new high. And you can see it getting to that level 4 times now since April, and has failed to get above that level. I want to see that level broken. But otherwise, pretty good week for the gold sector. Silver, this is another case where we did see a little pullback, and we've seen silver rally the last week and a half, and I just want to see a new higher high. Whenever you see a pullback, you want to see the next rise, the next rally to be greater than the previous rally. In terms of the top of the rally. So this is when we want to see silver get above 40. We want to see silver get above 40 to confirm that this is still in an uptrend. But overall, daily chart looks good. And I'd say silver had a pretty good week. Yeah, silver up 4.37% for the week. And the weekly chart looks really good as well. So a nice weekly chart for silver. What about copper? Copper had no bounce. I thought there might have been a bounce, but there was no bounce, up slightly. And yeah, there we go. Copper just going sideways after that massive fall because of tariffs. Anyway, so that's copper. No thoughts about copper right now. Iron ore, interesting enough, I've been going through ASX charts, and I've been circling the charts I really like. So what I do is I write down all the 2 codes of charts that look pretty good. And then I circle the ones that I think are looking even better. And one of the charts I've circled, including PWH Holdings, Jumbo, Hello World, Smart Group, Mineral Resources, Dicker Data, and one of the companies I put down is Fortescue. So because I've put Fortescue down, the chart's looking pretty good. better than has been. That means iron ore chart must be looking pretty good. So let's have a look at iron ore. Let's first have a look at the weekly chart. Nothing much here. It was up a little bit during the week, 0.93%. So this weekly chart looks meh to me. What about the daily chart? It looking any good? Maybe. So we did see iron ore pull back a few weeks ago, and this is another case where you want to see it get above the previous high. So we're talking about $108. But you can see this has happened in the past where it looks like it's moving into an uptrend and then iron ore prices fall away. So not that confident about iron ore right now, but Fortescue looks really good. So let's have a look at Fortescue right now. I do actually like this particular chart. I do like this chart. So potential trade for Fortescue. Uranium, nothing much happening with uranium. I have noticed that the Sprott physical uranium can be quite a bit different than other uranium, but not a massive amount difference. You can see here, I'm just toggling between the two. There's definitely similarities between, but if you have a look at the daily chart for Sprott Assets Management Uranium, whatever it's called, there was a really good day and then a really bad day. Up 3.85% on Wednesday and then down 4.2% on Thursday. And you don't really see that in the physical uranium. There wasn't that massive movement. Oh, I thought it was up, but that's a little spot on my computer screen. Thought that was because of this stupid, the way they do it here. Anyway, so that's uranium. Now onto oil, and just looking at oil prices, looks like it's been a pretty negative week for oil. So let's have a look. Maybe not. Maybe saying pretty is being a little bit overly dramatic. It was, well, no, down 5.8%. That is actually a fair bit down. So oil down 5.8% for the week, and the weekly chart looks meh. And the daily chart looks meh. In fact, oil's had, was that 1, 2, 6, 7 down days in a row, and it's fallen below the purple box. So your oil looking pretty weak, which is, I suppose, good for us who are paying for petrol. What else do we have here? Gas, natural gas. I'll just have a look at the daily charts for these. Natural gas, it is at a support level right now. Gas at about $3. Lithium, I don't think in this particular lithium chart you are seeing any rise in lithium, but let's have a look at lithium charts. Trading View. Still have yet to find a lithium chart that I like. Is that the one I like? I'm not sure. No, not Trading View. Oh, not Trading View. Trading Economics. But this is maybe the one chart I don't mind. And we have seen, looks like lithium starting to rally again. Yeah, so lithium, and I did notice a few lithium companies had a nice end to the week, including Pilbara. Yeah, Pilbara had a really good, up 10% or so. So maybe it's time to get a little bit more excited about lithium. And that's sort of what I'm talking about, being more of a medium-term trade mining companies. That would be definitely applicable to lithium. I don't want to be too hasty in selling those trades. I want to be a little bit more patient when it comes to mining companies, because in the past I've been a little bit less patient and I've sold out a little bit too early at the beginning of major trends. I actually did that with lithium quite a few years ago with the last trend up. I got in way earlier and I was being a little bit too impatient, and then I sold out fairly quickly. So I want to be less like that and just take advantage of any trends, because mining is very cyclical and you want to take advantage of the up cycles. And that's why I believe they're not long-term holds, because they're just too cyclical. Okay, and that's, this is coal. So I do own I am trading a few coal companies. They're probably in the, yeah, I was going to say they're the medium-term holds, but they're sort of, well, it's a tricky way to say it. So for lithium would be, if I do buy some lithium companies, that'd be definitely the medium term. I don't want to be so I put those into my super. But when it comes to coal, I'm less confident about the medium term. So that's more of a trade. But yeah, so I'm being a little bit, what's the word? I don't know the word. I'm not sure the word, but I'm being a little bit flimsy. I don't know what the word is. My rules are seemingly my rules are a little bit flimsy there. So it all depends on individual companies and individual sectors. What about tin? Whatever. Tin, and always have a look at Palladium because of Anderson. Oh, and look at Palladium. It's just dropped. Now, if you have a look at this could be just a bit of a pullback in the overall uptrend. But negative period for Palladium. In fact, in the last week, it's down 6.84%. And it's pulling out of resistance area. I'd like to see a bit of support coming in if it falls towards 1080. And then we want to see a nice little bounce. Okay, now on to crypto. We'll start off with Bitcoin. Nothing much to say here. Bitcoin, it's remaining up, remaining above 110,000. That's exactly what I want to see. I'd like to see it get above 125,000. That's the next stage. But I remember saying I'd like to see Bitcoin get above 100,000 and then 110,000. Now I'm at 125,000. So it's still going up. And it's a gradual move up. You can see Bitcoin went sideways between about 116 and 120,000 for about 3 or 4 weeks. Then it fell a little bit. Now it's gone back into that area. So this is a bit of a consolidation phase for Bitcoin, but we can't say the same thing about Ethereum. This one surprised me a little bit. This one just went bonkers and did break out. In fact, this is one of my favorite breakouts, and you can just see the volume. Look at the massive volume coming in, and this is exactly what I look for when it comes to individual companies breaking out. So typically when individual companies break out, I like to see the massive volume, share price breaking out to a long-term high, at least a 3-month high, preferably 6-month high. But typically it's on positive news, so I'm not sure you can say that about Ethereum, but this is exactly what I'm looking for when it comes to individual companies. Massive volume, share price breaking out. In fact, I put this line in as the highs for Ethereum going back to December 2024. So we are talking about long-term highs for Ethereum, not quite all-time highs. That's still back in 2021. But Ethereum actually chart looks actually better than Bitcoin right now. What about bonds? Staying firm at 4.85%. I'm not sure if we could say there's any significant trend here. Main reason behind that is the previous highs were not higher than the highs before, so we have not seen a higher high. And these lows were slightly above the previous lows, but if anything, I'll probably say 30-year government bonds, US bonds, are going sideways right now, going sideways. And finally, currency. It's back above 65 cents. Yay. And hopefully in the next month and a bit, the Australian dollar can go on a massive tear. Don't know how, but hopefully. Okay, now onto some individual companies' charts. These are all listed on the Nasdaq or New York Stock Exchange. And share prices of these companies either dropped like a rock or rose significantly based off some quarterly results. I did actually ask ChatGPT to give me the reason why this company's share price dropped or rose a lot. And hopefully these reasons are the truth. Sometimes I'm a little bit skeptical, but they did give some links. So anyway, so let's start off with, I think I get rid of Shopify. Oh, I've already got rid of it. Let's start off with, so there's 10 companies. Sezzle, share price down 34.3% on Friday's session after a really good rally. In fact, the share price has now halved from its highs. So who was it? Was it Sensei who bought some Sezzle shares? Hopefully Sensei got out. But why did Sezzle drop like a rock? 34%. Now, 34 point something percent. Now, this could mean there's an opportunity now. So I've done this in the past. When I've seen the share price of a company drop on quarterly results over there, I've taken a position because I found that the American market can be a lot more volatile than we are. This is on quarterly results. And sometimes I don't understand why the market is reacting like this. Now, I'm not sure about Sezzle. Apparently, headline revenue up strongly, but investors fixated on total revenue, less transaction costs, 60.3 million, and a higher credit loss provision. Shares sank the next session, or you already know that. The company also noted it's foregoing B Corp recertification. Have no idea what that means. So some of the underlying numbers were pretty good, but it seems like total revenue less transaction costs and higher credit loss provision is why the share price dropped. I could definitely see this dropping even further from here. I don't think this would be considered a high quality company, and not even sure the valuation must be pretty big. Yeah, $3 billion valuation. Okay, so that's Sezzle. But it was not the worst performer on a Friday session. That belongs to Trade Desk. Share price down 38.6% after we saw a pretty good rally. In fact, when they released their most previous results in May, share price rose 18.6%. But you can actually see just from Trade Desk how volatile United States can be, because when they released the results previous to the ones in May, in February, the share price dropped 32.98%. So I'm assuming these are all on results, quarter results. And you can see after that massive drop, the share price just kept on dropping and dropping and dropping. Then they had a good quarterly, share price rose, and then a bad quarterly. I'm assuming these are all quarterlies because we're talking about the 13th of February, then the 9th of May, and then the 8th of August, all 3 months apart. Anyway, so this is what you can see on the Nasdaq and New York Stock Exchange. And also look at the volume, massive volume as well. There was also massive volume on the 17th of July and 15th of July, and the share price did rise 7%. So I'm not sure what happened that day, but is this an opportunity for Trade Desk? I don't know much about Trade Desk. CEO flagged tariff uncertainty weighing on large brand advertisers. Guide was only in line and CFO changed added nerves. Steep sell-off. So is this an opportunity? The way I look at these, without knowing much about the company, does the market consider this company to be high quality? So I just look at the 200-week moving average. This company listed in 2017, and the share price is now below the 200-week moving average. It's done that a few times in the past. So maybe this is a market overreaction. But the other thing I'd also point out is when they did release negative results back in February, share price continued to plunge after that. So I'm not exactly sure if this is an opportunity for Trade Desk. Next on the list is Supermicro Computer. I can't believe I forgot that word. Supermicro Computer. This one can be all over the place. You can see the volatility in this company. So this is one where I think you probably would want to have more of a long-term view, because unless you're a really good trader, the share price of this one could just go up or down on a whim, it seems like. Anyway, so share price down, what was it down? Down a fair bit, 18% on Wednesday. And the reason the share price was down, they missed expectations with margins, worries, and softer guidance. Fears on mix and profitability hit the stock. There you go. So share price down. This is another case where I'd probably just have a look at the weekly chart, and you can just see even the weekly chart. So much interest in this company from 2022 to the middle of 2024, and that interest has sort of gone away a little bit. Share price has more than halved. It's gone down 60 or 70% since the highs. In fact, we can measure it right now. Instead of just guessing, share price has gone down 63.82%. I was fairly right. 60 or 70%. I was almost in the middle. So share price has decreased 63.8% since the highs. And before that, it rose significantly. Would I trade? Would I buy this? I'm not sure about this one. Well, the share price is near the 200-week moving average. Okay, next on the list, we have Arista Network. I knew nothing about this company. But I did a video on this titled In Pursuit of High Quality Stocks, Arista Network. I'm releasing this at this point towards the middle of October. I recorded this video well over a month ago, and that was the first time I looked at it. I can't remember what I spoke about when it comes to Arista. I'm not sure if I said it was pretty good, what a great company, that sort of thing. Can't remember at this point, but they did release results, and look at that. Share price up 17.5% and has reached a record high. And for Arista Networks, beat, so it was a beat, and looks like they raised guidance. Strength in AI, cloud, enterprise networking spend push shares higher. So this chart looks interesting. And you can see, again, a bit of volatility here. Share price dropped a fair bit. at the start of the year. In fact, it went all the way down from $132 to $60. So share price halved, but now the share price has more than doubled since then. So I wish I did. Actually, I might have said that. I wish I discovered this company a little bit earlier. If you have a look at the weekly chart for Arista Networks, and look at that. Look at that. Share price bounced perfectly. I probably mentioned this. Share price bounced perfectly off the 200-week moving average. I think that's probably why I mentioned I wish I discovered this company a little bit earlier. And yeah, so Arista Networks, maybe one to put on your watch list. Next, we have Fortinet. I don't know anything about this company, but the share price did drop a fair bit. In fact, we'll go back to this. In fact, on Thursday, share price dropped 22.03%. After, you can see again, if you go back to August last year, share price rose 25%. And you can see a lot of volatility here. There was one day share price rose 13% after a bit of a drop. So it looks like there was a little bit of interest in this company until they released their quarter results, and pretty big volume did come on that day. So why was Fortinet down? Beat the quarter, so the numbers beat estimates, but issued cautious outlook. Street question, firewall refresh momentum, means nothing to me. So that's why the share price dropped, because of the cautious outlook. That is a fairly common theme. I have seen share prices of companies drop a fair bit on cautious outlooks. I'm even sure that Trade Desk dropped because of a cautious outlook. Their guidance was a little bit lower than expectations. So I think it is actually wise for companies to be a little bit more cautious. But that can lead to opportunities. Now, this is the first time I've ever knew about Fortinet. Let's have a look at the weekly chart for this company. Oh, have a look at this. Share price bounced on Friday or Thursday exactly off the 200-week moving average, almost perfectly. Is that a coincidence? I don't know. In fact, the 200-week moving average has acted as support for a long, long time. So if you've heard of this company, you like it, maybe now is the time to buy some Fortinet shares. In fact, I'm going to put it down. I'm going to do just a little bit of research on this one. Because if it is high quality, this could be the time to buy. Anyway, so next one is Twilio. Now, I know I've heard of this company, but I can't really tell you what they do. What do they do? Development of communication software, cloud-based platforms and services. Anyway, so I've heard of this company, definitely heard of this company before, but their share price did drop 19% on a Friday, pretty big volume as well. This is another case where you can see a massive amount of volatility. Again, we've heard on Hot Copper, we see people say, I'm putting all my money to the Americans because you don't see this sort of reaction from the market. It's much more stable over there, all this stupid stuff like that. But it's so much more volatile on American markets. And you can still see that with Twilio. On the 31st of October, share price up 14%. Looks like they released something on the 24th of January, share price up 20%. And then not long after that, share price dropped 15%, and looks like that's on quarter results. So anyway, so that's Twilio, share price down 19% on Friday. They beat quarter two revenue. So again, another beat. Earnings per share, but gross margin fell again. And outlook margin trajectory disappointed. So some of these companies are beating expectations, but their outlook or guidance is disappointing. And that can send the share price down. So when it comes to results, it's not the underlying numbers. It's how the underlying numbers compare to expectations and any sort of outlook or guidance a company releases. So that's interesting that a few companies did beat guidance, but they did put out disappointing outlooks. And Twilio is one of those. If you again have a look at the weekly chart for this company, oh, no, not for me. Not this. Although this is what I did with Shopify. Although I knew Shopify a little bit more than Twilio. Okay, let's talk about a good news story. Duolingo. Yes, for those who play Duolingo, and I do. Maybe not play is the right word. Learn languages via Duolingo. You can actually what do you call it? You can own this company. It's valued at 16.8 billion. So learning languages is a fairly lucrative thing to do. Well, not do, but to teaching languages is a pretty lucrative thing to do. Anyhow, this is actually a really interesting reaction. So I actually did ask ChatGPT, give me all the companies whose share price rose or dropped a lot in the quarterly reporting, and it gave me Duolingo, and in fact, it said Duolingo share price was up 20 or 30%. So then I looked at the chart and went, no, it's not really, is it? It was, at one point it was. Anyway, so Duolingo beat and raised guidance. AI features max video calls, driving monetization, RPU, stock popped. But in saying all that, yeah, the share price initially did pop up, but I would say there was a bit of resistance. Shareholders bought at high prices. You can see the share price dropping. And even Duolingo, you can see the share price in May rose on results, up 21.61%. But looks like maybe in February it dropped on results. So a fair bit of volatility in this one as well. A lot of volume coming in the last few days on selling. So that's a little bit more negative. So much less bullish when it comes to Duolingo. So I thought this one was going to look good. Weekly chart, there's probably not a lot of data here, but we've just got the 200-week moving average. Just got it in there. Okay, next one is a company I've never heard of before, Celestica. Celestica, I could not tell you, has a market cap of 23.89 billion. I'll just have a quick look at TradingView. Engages in the provision of supply chain solutions globally to equipment manufacturers and service providers. They have advanced technology solutions, connectivity and cloud solutions, advanced technology solutions, aerospace, defense, industrial, smart energy, health tech, capital equipment business. Connectivity and cloud solutions segment consists of enterprise communications, telecommunications, etc., etc. Founded in 1994, is headquartered in Toronto, Canada. So another Canadian company, maybe. This is the weekly chart, and this weekly chart is a chart of a company that is growing quickly. And if you put in the 200-week moving average, whoa, look at that. Even that average is not. Share price has rallied significantly from the bottom of May. In fact, the share price has more than tripled. Wow, more than tripled. And when they released results, share price up 16.5%. Big beat. So apparently this was a big beat. And they raised guidance on robust AI data center demand. Oh, so this could be a data center company. Stock jumped, and wow, did it ever. I'm just going to have a quick look at financials here. So if you have a look at the annual revenue, has grown from $6 billion to $9 billion the last 5 years, and income's at $400 million. So this company is currently trading on a P/E ratio of 43. There you go. Celestica, company I've never heard of before. Okay, next one is another company I've never heard of before. This company is called IDEXX Labs. Share price popped up on the 4th of August, up 27.5%. And 2 days previous to that pop-up, share price dropped 6.6%. It does look like when this company does release results, like in May, share price went up 9%. And before that, the share price was in a downtrend. So this was a breakout. This was a trend killer event back in May. And since then, the share price has gone up a fair bit. So IDEXX Laboratories, I'm assuming they're a science type company. Market cap is 52.65 billion, so it's fairly big. Talking about revenue of $3.9 billion, profit almost $1 billion, so nice margins there. And the P/E ratio 54.11. What they do? Let's have a look. Development, manufacture, and distribution of products and services for the animal, veterinary, livestock, and poultry, dairy, and water testing markets. There you go. IDEXX Laboratories. So while the share price rally, strong beat and guidance raise, vet diagnostics demand, including new analyzers, drove results. IDEXX Labs. And what about the weekly chart? Interesting. The weekly chart is not really. Oh, sort of is. I think this rally back in 2020, 2022 was really strong. So share price has sort of struggled since then. But yeah, this actually is a chart of a quasi high quality company. And finally, Crocs. I'm not sure if this is the company that makes Crocs. Is that stupid, me thinking that? I have no idea. development, manufacturer, worldwide marketing, sale, distribution of lifestyle footwear and accessories. It operates through the Crocs brand. And hey, it is a company that makes Crocs. Is really Crocs that popular? Or is it they just own other stuff as well? I've never owned and would ever own Crocs. I'm sorry, it's just not for me. Markup is only $4 billion. Oh, anyway, so the share price of this company dropped a fair bit on Thursday, 7th of August. In fact, almost 30%. So obviously the results must have disappointed. Daily chart looks big for me. Weak guidance, revenue, is that negative 9 to 11% per quarter? Tariff headwinds and concern. The ugly shoe boom is fading. That's probably a good way to put it, ugly shoes. I just wear shoes or buy shoes that are comfortable. And in fact, when you're looking for hiking shoes, don't find what you want. Find what your feet need. Find what your feet need, not what you want. It's a big difference. And I used that philosophy when I bought my last hiking shoes. There was these one shoes I really liked. I went, oh, I want those shoes. They look really nice. They look really nice. I put them on my feet, and my feet were like, no, these are not for me. And I already own these solid black hiking shoes, and I didn't want more black hiking shoes. And then I put these, I think it was Merrell Moab shoes on. I was like, whatever, I'll just try them on. And they were just perfect for my feet. My feet loved them. And I went, yeah, I'm going to have to buy those shoes. Anyway, so that's Crocs. That's it. That's what I'm going to look at when it comes to this company. I might just have a look at the weekly chart. All over the place. Anyway, that's all I have for this technical update video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for the video. Have a good day. Bye.